Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at day trading the US E-minis using the new micro E-mini accounts or contracts. But before we start, we have to look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss of trading and investing, or put another way, all professional traders know and understand, but more importantly accept that losses can and will and do happen, no matter what trading approach you look at. Right, this is yesterday, which is July the 18th, and this is the micro account of the E-mini, the ES. So I want to have a look at how MTPredictor did yesterday. For you guys who've been following us for a while will know MTPredictor is not a black box system. We don't blindly take our automatic setups, say in the direction of our MTP trend color. We look for the higher time frame support and resistance zones. We do this because markets are basically random half the time. In other words, 50% of the time they're basically in a random position and you don't quite know what the large degree trend is, and therefore you can't do any meaningful analysis. So the question is, how do we then decide when the market comes into a clear phase? Well, for this we use our higher time frame chart. So if you're looking to trade off a 3-minute chart, you'd go out to the 15-minute chart and look for the higher time frame support and resistance zones. So I just want to take our chart back a little bit further to perhaps just after that high was made there, and to show you how you put these on the chart. By the way, if you're using daily charts, you'd go out to the weekly chart for the longer time frame. If you're looking at say 4 hour sort of 4x chart, you go out to the daily. But because we're looking at a 3-minute chart, you'd go out to the 15-minute chart. So here was the position at around, well, just after 10 o'clock yesterday. So you can see we had a pivot low here. So we right mouse click, we do decision point. Now can you see how that's on the chart in advance? It's there before the market even gets there. In other words, it's projecting in advance a potential support zone. If I turn training mode off, you can see what the market did. It went down into that support zone, and as you can see, that actually nailed the low of the day for you really nicely. So that's on the 15-minute chart. So how can you use that on your time frame you're trading, which in this case is your 3-minute chart? Well, again, I'll use training mode, and I'll jump back to here, and this is what it would have looked like at the time. By the way, there was a potential buy setup here. You can see that by our history triangle, this would not have been a valid setup for several reasons. Firstly, because we hadn't come down to large degree support, and also our MTP trend was red, so you wouldn't have been taking that. But I want to look at this DP buy here. So can you see how this came in at our higher time frame support? Now that was prepared in advance, so all the way as the market was going down to this level, you were then anticipating potential support, so that's where you could have used your scanner to then hone in on when that trade setup actually comes in. Our MTP trend had gone grey to show you also in the process of making a reversal. So we right mouse click over the blue buy bar, let's do analysis. This gives you the position sizing, so it gives you the entry level and the stop trigger, and also our potential target level, but also calculates the number of contracts or shares or lots, in this case contracts, to trade. Now here I'm using quite a small account. I'm using a $2,000 account, and this is where the E-mini micros can really help out, because if I use our normal $20,000 account, you can see obviously that's a lot higher contracts. So if I use a small account, say a $2,000 account, this allows you to then go along 3 contracts, which means your initial risk would be approximately $34, ignoring slippage and commission, and our potential profit, if the market gets up to our first target, which would be there, would be potentially $200, or more importantly 6 times the initial risk. That's what's important about position sizing, is when you're wrong, and we'll look at a losing trade in a minute, the losses are kept small at 1 risk unit. When you're right, the profits are large, but not large just in dollars, but large in relation to the initial risks. If I move forward, you can see the market rallied up quite nicely and then hit the initial target here. This is when we look to our strength band on our MTP trend. Can you see we have 2 grey lines here? Well, if I look at, I'll just use the cursor here this time, as the market goes up and hits that level there, can you see how the MTP trend had gone through its strength line. In other words, it had gone through its grey line. Now when it goes through its grey line, it means the market is trending or strong. In other words, it's likely to go further. So rather than looking to come out at our level here, we then use our ATR stop, which is our blue dots or red dots if it's going down, to then trail your position. So in other words, the market stop would have been here, it would have been trailed on these blue dots all the way up, and then you'd have eventually stopped out just about there. Now can you see how that would allow you to run your trade a bit further, and would have increased your profit to 8R, or just over 8 times the initial risk. So that's a good example of using the E-mini micro accounts with our MTPredictor software. And as you can see yesterday, it caught a very nice trade which actually gave a DP buy setup on the very bar of the low of the day yesterday, and allowed you to trail your profitable position as the market rallied up through this big rally here and came out with a profit of approximately 8 times the initial risk. Now of course it's you don't make money all the time. If I go over to the NQ here, you can see earlier in the day, by the way, this is the big contract here, so I'm going to change that back to looking at $20,000. There was actually a sell set up on the way down. If I right mouse click here, that would have then come down and caught a very nice 4-hour profit on the way down. But more importantly, and I want to show a losing trade in this video, if I place the support zone on there, can you see how there was a history triangle at that level? If I right mouse click over this and do analysis, that allows you to place the analysis on the chart, and you can see that would have been a valid trade because that was at major support, in other words 15-minute support, and that was also when our MTP trend was blue. That would have taken you in and then stopped you out. This is where our position sizing comes in, because if that had been on a micro account, that would again just be 1R, or 1 risk unit loss. So that's why we use position sizing. So when we're wrong, and there always will be losing trades when doing any kind of trading, the losses are kept small at -1R. On the YM, again this is the big contract, on the way down there weren't any trades, because remember you wouldn't have been taking that buy setup because you hadn't reached support. The market was rallying back up again, and this one actually stayed red. Our MTP trend was red. So if you'd actually taken that trade, you'd probably want to be cautious, because remember at the same time the ES was rallying up nicely off support, so the picture on the ES was really clear. If you had have taken that, you'd probably want to bring your stop to break even. But the trade I wanted to focus on was this one on the E-mini here, and you can see how we managed to project in advance on our higher time frame chart this 15-minute support zone. So that was there on the chart in advance. I can't stress that enough, and that was in that it was actually preparing you for potential support before the market even got there. And as you can see, what the market did was went down to that support level. That's where the low of the day was made, and the market then rallied up quite nicely since that, with an automatic DP buy setup catching the very bar of the low of the day. And the result, as the market went past our initial target, because our MTP trend was strong, in other words beyond our strength band, we then trailed with our ATR stop, that then came out with a profit of approximately 8 times the initial risk, or 8 times the initial risk required to take the trade. So this is on the big contract here, using $20,000, risking 2%. You can see the risk would have been just under $400, with a potential profit of again about just over 8 times the initial risk. And if you're trading the mini contract with say a smaller account, exactly the same idea, that the position sizing here keeps the initial risks and losses small and our profits large. And as you can see, that's the result. A very nice trade, catching the strongest rally of the day yesterday.